In studio, we're joined by Eugene Beneke. He's CEO of Iliad, which is a building materials supplier. Eugene, thanks so much for joining us here at the JSE. Let's just talk about the numbers that came out for your interim results. Your HEPS down some 30%, turnover down 2.6%. The World Cup is over. Are these results really based on the fact that the overall economy are not doing so well in the construction industry?
Yes, Sue, the building material supply industry has been under pressure for the last 18 months. Some of the key indicators shows those challenges, including building plans passed. At the same time, specifically in the residential sector, there's the first signs of a level of recovery, although we believe it will only come through gradually at the start of 2011.
So in terms of other factors which have led to these results, you mentioned in the results that the lower sales as well as continued losses in your ceramics cluster. Just talk us through those.
Yes, the ceramics cluster is a significant impactor on the result, and yes, we are under pressure. A lot of good work has been done in terms of curtailing the expense base and managing stock, but it's important for us now to get the top line to show some growth.
And what are your expectations on that front?
Well, at the moment, we're still in a very difficult environment. The finishing end of the business is under pressure given constrained disposable income. So we do expect to make progress in the second half of the year, but the bulk of the improvement should only come through in 2011.
You're also having an ongoing review of your store portfolio. What does that mean, and what can we look forward to in the next half of the year?
It's an ongoing process. We have strong brands in our stable, and we look for opportunities where we believe we have opportunities footprint-wise to open up new stores, and there's a new store opening on the KZN North Coast towards the end of the year. And at the same time, as properties, the leases come up for renewal, we reassess how those businesses have performed in the good and the tough times, and we necessarily make a decision on renewing the leases or not.
What about store closures?
We've had one. We closed one store in the Mpumalanga area, and at the same time we are considering another store closure as we speak.
And where is that?
That is in KZN.
Okay. So which regions would you say are the most under pressure?
At the moment, the Gauteng region. There's a lot of residential stock still in the market. Gauteng taking a lot of strain. Behind that, also a bit of pressure in the Western Cape.
We're now sort of 1 month into the second half of the year. In terms of demand in the residential and non-residential markets, what are you seeing so far?
Trends very similar. So a reasonable performance under the circumstances in the general building materials sector of the business, specialised still under pressure.
And just sort of given the pressures that we're seeing here in South Africa, are there any plans to kind of expand into the regions where there is an uptick in the construction industry, for instance, Mozambique or perhaps Zambia?
At the moment, no specific plans to expand beyond our borders. We have a strong footprint, but at the same time, there is still opportunities for us, and we'll look to take advantage of those. And
let's just quickly chat about your debt position at the moment.
Yes, our balance sheet is strong. So we remain and continue to be a very strong cash flow generator. So we're very pleased with working capital management in the first half of the year. Linked to that, gross margins in the specialised side of the business is showing a recovery. And we're also very pleased with the outcome of the projects we've had in place towards the end of last year to curtail expenses in the business. On a comparable basis, we have been able to not only beat inflation, but in rand terms be down on the prior year.